Welcome in, welcome in. Hey, Wayne. What's up, Kirkland Sterling? Devin, good to see you. Hey, folks. Roger, thanks for coming through. All right. I'm so excited for tonight. I'll tell you what, you guys could be doing anything in the world tonight. You could be watching Slammiversary, TNA Slammiversary, where AJ Styles is coming back to TNA after 10 years. But you decided, hey, maybe I want to go invest in myself. I want to go learn a new skill that will help me get paid. You know what? That's exactly what we're going to be doing here tonight. I do need a favor. Um, as you guys are coming in, I need you to be plugging in where you're from, what states you're in, and what you're currently doing as your main hustle. If you got a 9 to 5, tell me what it is. If you're already doing something related to real estate, because that's what we're talking about tonight, drop what you're doing. I'm a real estate agent. I'm a wholesaler. I'm a developer. I'm a builder. I'm a mortgage broker. I'm a mortgage lender. I want to know what you guys are doing. The the way to get the most out of tonight is going to be through participation. You guys could hear me yap for sure. You're going to gain a lot out of tonight, but I need to know what you guys are doing so that I can talk specifically to how you will most benefit from taking on this new skill set. Hey guys, thanks for joining. My name is Hard Money Gary. I have been funding real estate deals all across the country for the last 4 years without a license, without any previous experience in brokering loans or in the lending industry, and certainly without paying for ads. I want to show you what this business has done for me. And if you feel like it's something that you could add into the mix of what you're already doing, then I'm going to show you what the next steps will look like. Okay. Alex Delatorre, thanks for coming through. Looks familiar, like a familiar name. Thanks for coming through. D. Thompson, Daryl Wallace, David McCormack. Hey, we got Teresa's note taker. We got Garrett's note taker. Well, I hope you guys get a whole lot out of tonight. What I need you guys to do is, as you're coming through, I need you to be putting in the chat where you're from or the nearest biggest city and what your current hustle is, whether it's a 9 to 5 or you're already in real estate or you're another type of business owner, you're a landscaper, contractor, developer, flipper, wholesaler, real estate agent, mortgage broker, mortgage lender, insurance, financial advisor. David McCormack he's in Houston, H Town, flips wholesale and rental properties. Kevin Thorson, he's a mortgage broker and wholesaler in Tampa. Well, Kevin, this if you're not already doing what we're doing tonight, then you're leaving money on the table. Alex Delatorre is in Memphis. Rogers in Macon, Georgia. Works at a paper mill. Well, if you don't want to be in that paper mill, let me give you a way for you to stack up some cash and get you on your way through the vehicle of real estate. Jessica Picasso is in Dallas. Let me paint this picture for you. Lawrence Coley is from Oakland, fix and flip real estate investor. You got what I mean? Roger Gully is in fintech. Okay. Paul Tabrone is in Seattle, Washington. All right. So we got people from all over the country tonight. If you've never seen me before, my name is Hard Money Gary, Gary Brown. I've been funding real estate deals all over the country without a license, without any previous mortgage experience, without paying for ads. And I want to be able to show you how to do the same without chasing after client after client after client after client. You see, we got some mortgage folks in here. They know for sure what that experience is like. Please, real estate agents, can you give me a referral? Please. Where are your first time home buyers at? Where are they? That doesn't seem like the way anymore, the traditional mortgage route. Wholesalers, you guys are doing as many deals as you possibly can, but the marketing that you're spending, 10 grand, 15 grand, $30,000 a month. Yeah, those are real numbers that you have to spend in order to be able to make the checks that the gurus post in their groups and on their socials. What we're going to go over tonight in just a few minutes, it's 8:03 right now. I want to make sure that everybody that registered has a chance to get in right from the jump. Okay. Demario Gold, good to see you. Duan Petty, Ella Volney, thank you for coming through. Freddie Hindi, good to see you. Gil, Marco Gutierrez, all right. Rachel Davis, that's a familiar name. Okay. As you guys are coming through here, put your states in the chat and where you're from and what your current hustle is, whether that's being a 9 to 5, you're in fintech, you're a mortgage lender, mortgage broker, flipper, real estate agent, developer, whatever the case may be. I want to know what you're doing right now. Because once I show you what this business looks like, then you have to figure out how you are going to make it your own. Rachel Davis is a 9 to 5er in Arkansas as a customer service rep. So she has a lot of phone experience. Most of the business of what I'm going to be showing you is customer service. So that's your angle, okay? That you know how to take care of your people. Abraham Portugal, I'm a city worker for the city of San Diego. Well, guess what? You know where the developers are moving to and migrating to. You see the gentrification, you see the pathway of progress. That's how you're going to be able to target the clients that you want to work with. Marco Gutierrez is a survivor. Sharon Rogers is in Plainfield, New Jersey. Charles Thornhill is a cook. Okay. You guys could be doing anything tonight. You could be watching your favorite show. You could be reading a book. You could be hanging with your family. But you know what you chose? You chose to invest some time in yourself to learn about a new skill set that you can add into what you're currently doing. Like Nakia Watts, she's a real estate agent, she's a realtor. She's going to be able to get out of tonight is a way for her not to just rely on first time home buyers, going to open houses and all that. Oh, she's already a lender. So then she knows the game. She knows the game. Okay. If you've never seen me before, my name is Hard Money Gary, Gary Brown. I've been funding real estate deals, off market investment properties all over the country for the last 4 years. And I've been doing that by focusing on the BRRRR strategy. Okay. Yes, I've done a couple of BRRRRs myself, but what this strategy allows you to do is it allows you to get paid time and time and time again from developing a client. You're not chasing deals. You're not chasing down people that have never heard of real estate investing before and convincing them that it's a good idea. You are actively helping people do what they were already going to do. And trust me, they are already in your network. Nakia Watts already knows me from TikTok. We'll get that into a second. Okay. It's 7 past. I'm not wasting any time. Here's what we're going over tonight. We're going to be going over how to make money as a private money broker. Okay. I'm going to show you how to earn 4 to 5 figure checks in real estate just by helping other real estate investors get the cash they need for their projects. And we're going to do that by leveraging the BRRRR strategy. Okay. The BRRRR strategy is so widely popularized and proselytized to newbie investors and experienced investors on how to build and scale their rental portfolio that it allows us to step in, help them do and execute that strategy, and get paid for helping them do it. So there's two questions whenever you're getting into these webinars or trying to learn something new and maybe want to take action on something. There's two questions that you have to answer for yourself. Is this for me? Am I a good fit? And then ultimately, how fast can I really get paid? And it's my job tonight to show you that yes, it is for you. And I'm going to show you exactly how fast you can get paid. And it's a lot quicker than you think. You can get checks like a nearly $7,000 commission check for a portfolio loan cash out, $31.95 for a hard money loan, another $4,200 for a hard money loan, or all of these other checks here: 2409, 2940, 2928, 3030, 2580 for a DSCR loan. If those words aren't resonating yet, by the end of tonight, you're going to be more educated than your average real estate agent, investor, or really just any of the regular civilians. I mentioned the BRRRR strategy. This is the core of what you will need to understand. If there's anything that you need to spend time learning about, it's going to be the BRRRR strategy, because you're going to be targeting and working with people that are executing this strategy. So if you become an expert in the BRRRR strategy, then they can rely on you to execute your role, which is get them the money that they need so that they can keep the process going. It's buy, rehab, rent, refinance, and repeat. I'm going to stop the share for a second. You guys, go ahead and put your questions and your comments in the chat. I will get to all of them. This is going to be more valuable for you if you do put your questions in the chat, so that, because there might be somebody that has a question that they're afraid to answer, but you aren't. You're able to actually put it in there. Okay. All right. So what even is the BRRRR strategy? So the BRRRR strategy is a way for real estate investors, mom and pop real estate investors, regular everyday people, to be able to build and scale a rental portfolio from 0 properties to 3 properties inside of 12 months. That's the velocity that this can be. And what that means for you is that you can help people get money for every time they purchase a property and every time that they refinance a property. Refinance, what does that even mean? Well, real estate investors are focused on buying distressed properties, properties that need work, more than just slapping a coat of paint on there, more than just some carpet. They want to fix up the properties, do the kitchen, the bathroom, the roof, the windows, the mechanicals. They want to add value to properties, because that is how money is made, is by adding value and improving the property. We, as loan brokers, are the facilitators for getting the money to buy and rehab the property. You did hear that correct. We are the plug. We are the people that they need to know to get the money that they require to purchase properties and rehab it. Once the property's rehabbed and it is in great condition, they put a tenant in there, and that tenant is going to be paying rent. We're going to show them how to leverage the income from the property to extract additional cash that they didn't have before out of the property to put back in their pocket, pay off the loan that we got them before, and allow them to go and execute and repeat the process again. And we can do this for them inside of 90 days, 3 months. Guys, if you're tracking on the BRRRR strategy, or if you've executed the BRRRR strategy yourself, go ahead and put a 1 in the chat. I need to see who's actually paying attention and who's got me on in the background while they're watching Slammiversary or The Sopranos or something else. Who's actually paying attention? David's paying attention. Gary's paying attention. Dwan's paying attention. Nakia, Nathan, I'm going to bring you up. You're going to be able to ask your question like live time and talk to me at the end. But if you do have a question, go ahead and put that in the chat. Okay. I'm actively looking at it. Just like Michael and Otis and Ike and Carlos and Kirkland and Troy and Paul and Gil and Sadiq. They all understand what the BRRRR process looks like. And Charlotte. So, what is a loan broker? Well, a loan broker is the guy, is the plug, is the middleman, is the person that people need to know, the consultant that is going to be connecting people that need money with the people and companies that have money. Your job is to be the quarterback in the huddle, telling people where to go and what to do, collecting all the information, getting it to the people that need it, and then you get paid. How much do you get paid? 1 to 3% of the loan amount. Now, that doesn't sound like a whole lot. 1%, 3%. What are you talking about? I'm trying to actually make money here. I'm in my 9 to 5. How am I going to escape that? Let's start to think bigger. If you're in Oakland, California, or in San Diego, California, it is not unheard of for people to be buying properties that are still in distress for $500,000, $600,000, $700,000. For $500,000, $600,000, $700,000, if you're earning 1%, that means $5,000, $6,000, $7,000 for being the people that know how to execute the BRRRR strategy and connecting the people together that have the money and the people that need the money. All right. So who am I? I'm Hard Money Gary. I've got over 30,000 followers on TikTok just by rapping about the BRRRR strategy, hard money, and DSCR loans. I don't sacrifice my time to earn a check. This business allows me to build my schedule as I want. So if we want to be hanging out on the porch, or if I want to take my wife to a show in New York City, I'm not worried about, oh, where's the next check going to come from? Where's the next deal going to come from? I've built a clientele base that does 3 to 4 BRRRR properties per year. I specialize in the BRRRR process because it allows us to get paid 2 times per property. I just showed you where we're able to hook them up with the money to purchase and rehab, and then we're able to hook them up with the money for the refinance. If we're earning 1%, even just 1% on a property that was once worth $300,000 and is now worth $600,000, then we could make anywhere from $3,000 to $6,000 per transaction. That's $9,000 for a single property. Okay, $9,000 for a single property. What would $9,000 just, if you helped one client execute the BRRRR strategy 1 time per year, what would that do for your bottom line? Go ahead and put that in the chat. I developed my skill set of understanding how the real estate transaction works from 2018 to 2021. I was wholesaling. I was working as a acquisitions manager for a handful of wholesalers. We were doing it virtually all over the country, in Oklahoma City and in Pennsylvania, Maryland, Delaware, Virginia, New Jersey, Connecticut, all over the country. What that allowed me to do was it showed me who's making money, how they're making money, and who's doing the most work in order to earn that check. Wholesalers, you guys earn big checks. Not going to lie, big checks. Okay. But you're doing a lot of work. You are cold calling for hours. You are spending thousands of dollars to generate the volume that you need in order to be able to have a consistent pipeline. You're going through all of the emotional drama that a distressed seller naturally has because they're going through some sort of situation like death, medical, divorce, distance, or disrepair, right? They have to be in distress for you to be able to get a property under contract. No one in their right mind would take 60 cents on the dollar. All of those things are hurdles for you. Whereas if you can just shift your focus onto real estate investors who at some point or another are going to need the products that you now can offer, hard money and DSCR loans, they are always going to be in need of these products at some point in their career. I need to know what you guys have already tried and failed or tried and succeeded at before. How many of you guys have tried and worked another program or worked with another guru or coach and put some time and effort into it and it never went anywhere? I gotta see who we're working with here. We got about 72 people in the room right now. So, all right, so PML, DSCR. Okay. And if you don't mind, share with me what you were doing. Was it a was it a lizard lending or was it some sort of sub two? Right. Rich is right there doing the lizard lending. No one. Transactional lending for 9 months and I quit. Okay. Struggling in residential, tried wholesaling. BRRRR, but didn't have the capital and they couldn't help me. Lost $1,000 on that mentorship. Too much time for nothing, says PML DSCR. Juana Ruiz. You're still learning. Okay. So the goal of tonight is for me to show you what this business looks like. Hopefully you'll have an idea as to how you can implement it for yourself, either through your existing network or where you can find people that need your services, work with them and get paid. Ultimately, I want to give you everything that you require to get started. And we're going to be doing that in our boot camp. Our boot camp is going to be on August 3rd and August 4th. We are going to go over soup to nuts on how to structure your business, how to find real estate investors, the lenders that you need to use, the scripts, templates, and everything. Okay. Michael said he was an Airbnb and tax savings, tax lien, tax code 2. Okay. So we went over the BRRRR strategy. So let's go over the first part of the BRRRR strategy. What is it that we're actually getting them for the purchase and rehab of a property? Well, this is for hard money loans. Hard money is a real estate investing tool that investors use in order to be able to buy, fix, and flip properties, as well as buy, fix up properties to rent. You get money towards the purchase price and up to 100% of the rehab budget reimbursed to you as you go through the milestones of the project. It's a short-term, higher interest loan and flexible on credit. Okay. What I just said rings so true to business owners and real estate investors. Okay. They need cost-effective capital that gets them most of the money that they need in order to be able to purchase and rehab a property. A hard money loan is structured in that they get up to 80, 85, 90% of the purchase price at closing, meaning that they're just bringing 10, 15, maybe 20% down. Then, as they go through the milestones of the project, they pay for the kitchen to get done. They pay for the bathroom to get done. They paint, carpet, mechanicals. As they go through the milestones of the project, they get reimbursed dollar for dollar on what they spend. So what does that do for their overall cash management? It allows them to still be on the hunt for looking for more deals, okay? We're allowing them to still execute their business, which their main operation is finding other properties to be able to fix and flip or fix up properties to rent. The interest rate on these loans is anywhere from 9 to 13% on average. That sounds so high. Who would pay 9 to 13%? Well, you guys need to break that limiting mindset and limiting belief, because here's the actuality. If you land right in the middle of that at 12%, what that actually means is 1% of the loan amount due each month, interest only. If you have a $100,000 loan outstanding and it's at a 12% interest rate, APY, what you're actually paying is $1,000 per month. You're not supposed to be in these loans very long. The BRRRR strategy is meant to be executed within 90 days. What does that mean? That's 3 months. $100,000 at 12% for 3 months is how much? Go ahead and put that in the chat. How much would that be over 3 months? $100,000 loan, 12%. They're paying 1% per month. How much? Ike says, as a person learning the BRRRR strategy, how could I use this program to fund my own projects? How much down payment is required from me? So the way that you would leverage this program is having a deeper understanding of what lenders are looking for and what lenders are out there, and being able to smooth out the process. Once I show you, once you establish your own relationship with the lenders, then you're going to be able to go directly to them, and maybe you don't have to pay an origination fee. Wayne Carter, Abraham Portugal, Paul Henry, thank you for participating. I appreciate it. This is the math. 3 months, 12% interest, $100,000 loan. You're paying $1,000 per month. They're paying $3,000 if they're in the loan for 3 months, 90 days. Okay, so 3,000. The reason why you use a hard money loan is because of speed. You're able to close as quick as cash. You can make a cash offer similar to those that actually have the cash, but you can follow through with that cash offer because you're closing as soon as title's ready. And it's flexible on credit. The condition of the property doesn't matter. Any real estate agent in here, or mortgage lender in here, or somebody that's tried to sell a retail property, FHA loans, oh my gosh, the paint has to be specifically stroked a certain way. Oh, this smoke detector has to be there, or any number of things. Eliza, it is more than a cup of coffee and less than a nice suit. And we're going to get to that in about 20 minutes. And banks won't fund fixer-upper properties. Ike's even helping me. Ike's already on his way. So typical terms are going to be 6 to 18 months. And if you'll notice right here, it says 2 to 4 points. That's our compensation included in that. Okay. Our 1 to 3% can be any part of that 2 to 4 points. We are not making this tool more expensive. The lender relationships that I'm going to introduce you to will be at maybe 1 or 0 of their own points, which allows you to charge the nationwide average of 2 to 3 points. What's that mean for you? Again, If we're talking about that same $100,000 loan and you're earning 2 points, that's 2 grand. 3 points, that's 3 grand. I have a lender that allows up to 5 points. All right, Sanbi, including their fee, right? But you charge two. Exactly. So they're going to be at 3 and you'll be at 2. That's on the higher end. I want to give you a relationship where they will be lower than that so that you can be competitive and that your clients won't say, oh my gosh, I don't want to work with San anymore. Like, his fees kind of getting in the way. Like, we don't want that. We want to be helpful. Okay. So this is the process. If you guys can follow this process, then you can get paid. Step one, pre-approval. You're going to have a conversation with the borrower or the real estate investor. Hey, tell me about your deal. Have you done this before? How much money are you looking to make? What's your credit look like? How much cash do you have to throw in on this deal? If they can answer those questions, then you have enough data to go to the lender's calculator, plug in what they told you, and be able to issue them a preliminary term sheet. That prelim term sheet outlines exactly what they will be paying and allows them to understand what they're getting into and really, if they're visual learners, see what their costs are alongside and make sure this deal makes sense. They're going to make their offer and you can provide them a pre-approval letter that they're going to give to their real estate agent that's going to give it to the listing agent. Once that contract is accepted, you're going to collect the paperwork, simple documents, LLC paperwork, driver's license, scope of work of what they plan to do to the property so that you know it's going to be improved, a couple of bank statements. That's it. If you can handle that, then it's time to order the appraisal or some sort of valuation, a BPO, a broker price opinion. Oftentimes, that's at no cost to the borrower. A desktop appraisal that allows for the fastest time frame from inspection to close. The full appraisal, yes, it does take a little bit longer, but what comes with buying a full appraisal is oftentimes a lower interest rate. Once you get that value back and we know that they're still buying a deal and that it's going to be worth as much as they think it is once it's all fixed up, then we confirm the terms. We make sure insurance and title are all squared away. Then we get the clear to close from the lender. Then we get paid. Let's go. If you guys think you can handle following that process, go and drop some emojis in the chat. If you think you can handle following that 7-step process, drop some emojis in the chat. Sam B says, yeah. Gary, I love it. Wayne, let's go. Oh, Wayne Carter, like the Carter 3, like Lil Wayne. Paul Henry, Charlotte, yes. Kirkland, I love it. Strong style. Jan Moore, yeah, we order it through the lender. And I mean, if you want to pay for it on behalf of the borrower, you can, but the borrower typically pays for it. Delrose Jackson, I can follow that process for sure. Lawrence Coley, I can do it. If you can follow the process, you can get paid. So what's next? We showed how the buy and rehab portion got done, right? That's through the hard money loan. Next up, the investor needs to put a tenant in the property. A BPO is a broker price opinion. It's like an appraisal, but it's a real estate broker that's doing it, not a licensed appraiser. So we showed that the hard money loan does the buy and the rehab side. Next up, the investor puts a tenant in there so that it is now showing income from the rent. Can we all understand the process? You get a property rented out, it produces income. Well, what do we do now? Well, now we hook them up with a DSCR loan. A DSCR loan is a debt service coverage ratio loan. It's a real estate investing tool that investors use in order to keep their personal financials separate from the underwriting process. Well, what does that mean? Well, there's no proof of personal income or tax returns required. It's based primarily off of the property's ability to pay its own debts, not their personal financials. Yes, they do need to have a better than average credit. And that's part of the intake process when you talk to them up front for the hard money loan. The only way that the BRRRR strategy works is if you have enough information up front and they can go execute. Okay. First off, it is permanent financing. Do you guys understand what permanent financing means? It's a 30-year loan. It can be fixed, it can have an adjustable rate. We can do interest only. We can do it even up to a 40-year amortization on a 30-year schedule. But the DSCR is a debt service coverage ratio. Do you guys know what a ratio is? A ratio is a division problem. It's a fraction. It's gross rent over fixed expenses. Gross rent over fixed expenses. Gross rent, let's say it's $2,000 a month. That would be $24,000 for the year. Fixed expenses, principal, interest, taxes, and insurance. That would be your fixed expenses. Additionally, HOA fees, additionally, condo association fees, or anything that is like that would be included. But for the purposes of a single family 1-4, the typical BRRRR, principal, interest, taxes, and insurance. And when the numerator is equal to the denominator, that is a 1.0 ratio. That is break even. That means when rent is paid, they don't bring any positive cash flow. So what does that mean? It means that as long as the rent's paid, they can get approved for this loan. We don't want them to be at a 1.0 because we want our investors to make money, not only through appreciation, but through cash flow. So a 1.15 or a 1.25, a 15 or 25% gross profit is the target. And that's where you get the best terms as well. Here is the DSCR loan process. And if you guys can follow this process, you're going to get paid again. The refinance, the property's rent ready. Hey, Mr. Investor, just want to check in on how that project's going. Oh, it's going great, Gary. We got a tenant in there and everything. All right, it's time to get this thing refinanced. What's the rent? Okay. How's your credit doing? Can you give me a couple more of your updated bank statements? Because you've been in there for a couple of months. Sweet. Let me shoot you over this pre-approval. Again, you're going back to the lender's calculator. You're taking the data points. You're putting it in there. Then you order an appraisal. If everything works out great, then it comes back the same as the front end appraisal came in. Then we get all that, all the new paperwork and the appraisal back over to underwriting. They're going to take a little bit more time. They're no longer dating the property. This isn't a short-term loan. They're getting married to it. This is permanent financing. So they're going to do their due diligence and make sure that the market is not a declining market, that there's good rent in the area. So after about 2 weeks, they're going to confirm terms. Again, you go back to insurance, grab some updated insurance, make sure that title, no extraneous liens or crazy mechanic liens were put on the property. You get the clear to close and you get paid again. So when you made $3,000 on the front end for that $300,000 loan that you got them up front, now that the property's worth $500,000 and you're getting them a $400,000 loan, 80%, then you can make another. If you charge 1 point, you're going to make 4,000. So together, that would be $7,000, one property, one client. And the best part is because they're grabbing additional equity and cash so that they can go do it again, the repeat part, You can be like, hey, Gary, I want to do it again. Let me get you paid again. Let me put some bills in your pocket. If you think you can follow this process, go put some emojis in the chat. All right, you guys were blowing this thing up. So I want to go up and answer your question. So hard money loan is the short term, into DSCR is the long term. Yes. Can a DSCR loan be used for all property types? Typically single family 1 to 4s, most commercial multifamilies, 5 to 20 unit properties have some sort of DSCR loan associated with it. DSCR does come from the commercial world. So the DSCR loan that I'm talking about tonight is more focused on the single family 1 to 4. On commercial multifamilies and office and retail, industrial, and those types of buildings, they factor in some other stuff like property maintenance, vacancy, things like that. How much would a down payment on a $400,000 loan be? It would be based off of the property purchase price, and the loan is not indicative of the down payment. The purchase price is. Sherry, will there be a replay of this? I got here late. You got here just on time. We didn't even get rolling yet. Okay. Because the best is yet to come. How I show you how to thread all of this together through the boot camp that we're running on August 3rd and 4th. Let me make sure those dates, right? I think it is because it is August 4th and 5th. So August 4th and 5th, we'll be running the boot camp. So you didn't even miss anything yet, Sherry. Gary, do you charge an upfront retainer fee before you get started? If so, how much? I don't. I don't. I think that's a little bit scumbaggery. Um, there are some situations where you will need to do it, where let's say it's like a commercial building, like I was just talking about, but typically, no, I don't. All right, look at all these emojis. Let's go. Nikia Watt says, do you have your own team of MLOs or do you only teach through the boot camp? So I have a team of processors, and they help our coaching clients close their deals, which I'm about to show you what comes next. Okay, here is how you're going to have consistent deals every single month. You're going to need to network with people that have access to the people that you want to be working with. Those are wholesalers, real estate agents, other investors, financial advisors, CPAs, accountants, and business owners. You know what? These people like helping their clients because it helps them do their business. It helps them do their business better. You're not begging for referrals. This is a different conversation. You're the one with what everybody wants. You are selling the sexiest commodity in the world. You are selling money. When they need money, they're thinking of you. So the leads come to you. People love to talk about money. Be the one that they think of. And when you can collect docs efficiently, you can connect them with a lender, you can get paid. And this is how you can go from doing maybe one deal a month, which could earn you anywhere from $2,000 to $10,000, which, hey, you do $1 million loan every month, that's $10,000 a month. And that's only if you charge 1 point. So let's do a quick gut check. Can you guys answer these questions confidently? What are the key differences between a hard money and DSCR loan? I think even somebody put that in the chat. What are the typical interest rate and terms for each type of loan? Which one's short term? Which one's permanent? Do DSCR loans require personal income verification? Shit, do hard money loans require personal income verification? What is a DSCR ratio? How does it affect loan approval? When is it appropriate to use a hard money loan versus a DSCR loan? If you guys can confidently answer these questions without reading the answers that I put here for you, then you are more educated than most real estate agents, some real estate investors, and certainly the general public, which allows you to be positioned as an expert, somebody that people can trust and rely on when they're looking to make a business decision or start investing. That's the key. Positioning yourself as an expert, turning your knowledge into dollars. There's one surefire way to make it so that you can be the expert that people trust. And that is to own this new golden rule. He who has the gold makes the rules, which means that you need to act like a lender, like it's your money. You have to control the conversation. This involves you asking the right questions. Hey, tell me about your deal. How much money you think you're going to make? Have you done this before? What's your credit look like? How much cash do you have to throw in on the deal? If you can ask those questions and get the right answers, you are taking control and verifying that the person that you're talking to is worth it to put the deal into the process. Once you take control, you can guide your clients toward the best solution, leveraging your expertise and converting your knowledge into dollars, real dollars, like 2409, 2940, 3 grand, 2500, 2600, 2600. Hard money and DSCR loans both closing in the form of points. We're no longer focused on just like, okay, well, this is my fee. No, your points are percentage points of the loan amount. So if you're focused on say, hey, I'm a broker, I charge 1 point, 1 to 2 points per loan. I want to be cost effective, so this is my fee. Okay, let's jump back into it because I see you guys are blowing up the chat again here. Could you scroll up to my loan broker spread question? Okay, Ike. Ike, I don't know that it came through, man. Go ahead and put it in again. Are you hiring any more staff? Could you scroll up to my loan? Do I need an MLO license to do this? No, you don't need a license. I operate in 46 of the 50 states, which is why I had you guys, once you came in here, drop your states on what where you're at or your nearest biggest city and what you're currently doing as your main hustle. Shit, do that again now so that I can show you that we can do this virtually anywhere in the country. And the reason why I choose doing this is because I can market myself. I can put myself out there on social media, generate all the leads that I could ever need for the business based off of my knowledge and expertise, converting my knowledge into dollars, not spending a dollar on lead acquisition for for the loans and getting paid. DSCR is long term, hard money is short term. Yes, DSCR is permanent. So this is the money shot right here. Exactly. Pause. Do you see people using this for Airbnb? Yes, we can do short-term rentals with the DSCR loan. So we don't need to be licensed. I'm in North Carolina. I think you have to register or something. Well, when you work with the lenders that I'm trying to, guys, I'm going to get you into the into the boot camp, and I'm going to give you the lenders so that you can operate in all 50 states. I choose to work in 46 of the 50 states. I'm sorry, guys. If you're in North Dakota, South Dakota, no one's got you covered there. You have to go find a local bank there. But everywhere else, the rest of the 48 states, my lenders got you covered. Alabama, North Carolina. How do you find the investors? South Carolina, Florida, Texas, Fresno, Houston, Oklahoma, and Colorado. Brandon is in Chicago and you got a 9 to 5 job. Well, Brandon, What you're going to get excited about is that you're going to have access to be able to make an extra 3 to 5 grand essentially on demand by making new friends and partnerships with real estate investors and helping them execute on what they were already going to do, which is buy and rehab properties. Washington, need to change my financial situation. All right, Eliza. W. Jones is in real estate. Elaine's in New Jersey. Diana is in El Paso, New Jersey, and contracting and flipping. Joseph. Nikia Watts is in Cali. Delrose is in Maryland. Nevada, we can do it. California and Arizona, yes, we can do it. I would like to know how to market. Okay, I'm here to help you do that. Can the loan broker get paid a monthly spread in addition to the origination points? Yes, Ike, you can. You can mark up the interest rate and you can get paid a yield spread premium. Sadiq Sweet is in Philadelphia. Go Birds. Okay. So the reason why you want to align yourself with the BRRRR method, and I've kind of made it funny, and it's called brokering, is that the money's never going to dry up. Okay. The loans that you are going to be originating are bought and sold and traded by large hedge funds on Wall Street, hedge funds and insurance companies on Wall Street. They love the short-term loans. They love the high interest rate loans because they can earn more of a return on these asset-backed securities. Okay. You're converting your expertise into knowledge, which means that you're going to have repeat clients that want to work with you over and over again. So let's break this down. If you can make at least $2,500 per deal and you have a stable of 4 real estate investors that you help do 2 deals a year, okay? 4 times 2 is 8, right? 4 times 2 is 8, but it's actually 16 because you have 4 real estate investors that are buying 2 deals per year, and you are getting paid on the front end and the back end. That's 2. That's 16 paydays. If you make at least 2,500, that's $40,000 additional to your bottom line. Who can find 4 people that want to buy, fix up, and rent out real estate? You could trip over them at a real estate meetup. You just got to put yourself in the action. It's a highly profitable business. All you need is a phone and a laptop. And with my team's help, you might just only need a phone. So here's the breakdown. In the boot camp, we're going to master the BRRRR strategy and convert it into the broker method. I'm going to give you the templates and successful business structure so that you can implement it right away. I'm going to show you how to find clients and give you the lenders so that you can go and execute. I will also show you how to take this nationwide like a pro. This is the school group. This is the school group. This is where you're going to find all of the resources that you will need to get this business going. We have 187 people that have already committed to being the best version of themselves and earning $3,000 to $5,000 per deal. Inside of the classroom, you're going to get access to the hard money and DSCR loan basics course. So what we just went over as far as the hard money loan and DSCR loans, that was just the surface. You need to be able to be an expert so you can convert that knowledge into dollars. Okay. Here, I'll show you what is hard money, what are DSCR loans, where to find what landlords are, house flippers, how wholesalers can use it, residential and commercial, how to quickly identify a deal, what DSCR loans are. Inside of the Loan Broker mini course, I have all of the previously recorded boot camps so that you can review those before we even get started on August 4th and 5th. Okay? It's going to be very important for you to be able to grasp this knowledge so that you can hit the ground running. Okay. I saw that there were some things coming in here. What makes us stand out, stand from the competition? Well, Travis, it's your personal relationship. You got to be able to convey yourself properly, have the confidence in knowing that you are the guy that's going to get it done. I'm going to drop the school link in the chat, guys. Here's the school link for everybody. Okay. All right. So as a reminder, we're going to be mastering the broker method. I'm going to give you the templates and successful business structures, how to find clients and lenders, and how to take this nationwide like a pro, how to market yourself, how to put yourself out there on social media the right way. Normally the school costs 47 bucks a month. But for tonight, you're getting the boot camp and you're getting the school group for free remainder for lifetime. It's $197. In 4 hours, you'll be fully equipped to earn $2,500 to $5,000, maybe even $10,000 on a single deal. After completing the boot camp, you are going to be able to get access to my processors to actually execute the deal. If you guys have ever been salespeople before, the hardest part of the sales process is actually fulfillment. The sales conversation, that's easy. Everybody wants money. Asking the simple questions to gather the data points, getting them the term sheet, that's all simple stuff. But making sure that you're collecting the documents, that they're all in the right process and actually doing the quarterbacking of organizing, that's where the value comes in. And that's why you're actually earning the points that you are. And my team wants to help you do that. Scripts, templates, my contacts, you're going to get nationwide networking through the people that are already doing deals in there. Soon, we'll have exclusive courses on wholesaling, how to start your own meetup, transactional funding, how to get in on deals for wholesalers and getting paid $1,000 for renting money for an hour or two. This is a done with you business to close your first loan. Okay. So, what would adding another 4 to 5 figures do for your business? Go ahead and drop that in the chat. Exactly. 197 to make 2,500, but way more than that. Way more than that, Gary. Do you run this boot camp every month? We try to, Nakia. 197 is the only cost that you'll pay for the boot camp. W. Jones, game changer. Chris Day, awesome. I'm a realtor and have done DSCR as a loan officer before. I just let my license go because I'm a realtor first. Well, D Queen, you don't need a license. To clarify, in Houston, there are 30 plus hard money lenders. There is competition. How to stand out from your competitors. That's Travis. I'm doubling down on what I said. There are thousands of hard money lenders nationwide. How am I able to do my pipeline of 5 to 10 deals per month? How am I able to do that? It's because people know, like, and trust me, see my expertise, and want to partner with me to get their deal closed. And you're a broker. You can work with those hard money lenders because they want the deal too. That's where you can partner with the hard money lenders to get their deals closed. Dang. Okay, I have a group I belong to of wholesalers already, but I just don't have it right now. My daughter has had health issues getting back on my feet. $197. I mean, it's more than a cup of coffee, less than a nice suit. Certainly a way for you to know, like, and know and trust yourself. Like, how many people do you know right now that you can fund their next deal? If you are able to increase the cash flow of the property by engaging co-living, do you have lenders that will base their after repair value on the? That's so in the weeds, Ike. I'm sorry, man. It starts when? August 4th and 5th. Delrose, fabulous. Mr. Brown, when we pay, are we automatically approved with all lenders in your group? Do we have to get approved with each? Mike Soto, I want you to have your own relationships with the lenders. The reason being is that I don't want you to rely on me to do everything for you. I want you to invest in yourself, have your connections, and grow your connections outside of what I can do for you. I want you to get your first deal done, and I want my team to help you do that. Kirkland, all I needed. So are we marketing your company? No, you are not marketing my company, Rich. This is your deal. This business changed my life because the leads come to you. Okay. It's recession proof. It's economy proof. There will always be people that are trying to sell their distressed property, and there will be always be investors looking to invest in those properties, buy those discounted properties, and you can help them do that. It's a repeatable process. Just like the BRRRR process, this is a repeatable process. What if you have an MLO? Shavonda, what does that mean? What if you have an MLO? Like if you are a licensed originator. Again, guys, during the boot camp, we're going to master the BRRRR method. We're going to get you the templates for and successful business structure, how to find clients and lenders, and taking this nationwide like a pro. These are real checks. These are real points. If you're ready, then tap in. Okay. You're getting into the school group here. I'll put the link in again. If you guys are already in, go ahead and put I'm in the chat. If you're all ready to get started, go ahead and put I'm in the chat. Here's everything that comes with it. Okay. We're going to be doing monthly boot camps so that you can sharpen your skills. Hard money boot camps, DSCR boot camps, the BRRRR strategy specifically, scripts, templates, nationwide lenders, networking with the people that are already in the group and doing deals. You're going to get preferred vendors for title and insurance so you can really quarterback this thing and be in as most control as you possibly can. Weekly group calls. We give you deal marketing, marketing and lead generation tactics. This is everything you need to get started making $2,000 to $10,000 per month. Okay, I'm in. I've been seeing your videos for a while now, and I've been doing my due diligence, so I'm ready to get this going. Rich, Feast, I'm so excited to work with you and get you paid. All right, folks, that is tonight's presentation. So what that means for you is if you're still here hanging out, just like Elizabeth Avila has raised her hand, I'm going to bring you up. We can have a short conversation. I want to answer your questions so that you can get started. Thanks. Joining on payday. All right. Bookmark it. Are you a BRRRR investor yourself? And if so, could you walk us on how you utilize your connections to facilitate your own deals? So I bought my first two rental properties as a BRRRR strategy. If I were using this for myself, what I would simply be able to do is save on origination. I would be able to work with my account executive and say, hey, I'm looking to buy my own deal. Want to go directly with you guys. And that way you can save on the origination fee. The 195 is for a class on 8-4 via webinar or Las Vegas or some other place. It's going to be virtual just like this, but it's not going to be a webinar. It's going to be a Zoom call where you can actually participate in the conversation. We're going to meet together for a couple of hours each day and go. Can you join anytime before August 3rd? Uh, yes, but I will tell you that the 197 only is for tonight. Okay. We'll be because the way that we structure these things is that as you get closer to the date, there's more urgency in getting in there. So you guys are the first week in the cycle. So you're getting 197 for, and you get the school group for lifetime. Next week, it will be back to $47 a month or $397 for the year. That 47 bucks a month level is only for replays. $397 is for the boot camp, and that's $397 for the year. And closer up against the boot camp, it's just going to be the annual plan, $397. So earlier on, because it is still 2 weeks away, you're getting 197 and the school group for lifetime. Next week, you'll have 47 for replays, 397 for the annual. If you wait until August 4th or August 3rd, then it will be 397 annual only. So that's why you guys need to get in tonight. It's the best value. If you have questions, go ahead and raise your hand. I want to be able to pull you up. All right, Elizabeth Avila, if you're still in here, I'm going to bring you up to talk. Hey, Elizabeth, go ahead and unmute. Today it's 197 for lifetime. If I have a borrower, can I bring him tomorrow? Yeah, we can hop on a one-on-one call. If you guys have any questions, go ahead and use the raise your hand, and I will bring you up to chat. Alan Walters, how you feeling? Brandon, you're still in here hanging out. Byron Hader, what are your thoughts? Same thing with you, Chad. Cynthia, what's up? Dwayne, we were texting earlier. Ella Volney, nice to see you. So if you guys hadn't seen me any before tonight, my name is Hard Money Gary. Okay, you can find me at hardmoneygary.com. And that's where you can look at least how I present myself. The Hard Money Gary on TikTok. We got over 33,000 followers on there right now. We have hours of short form content, bite size, that's all talking about evergreen hard money and DSCR loan content that you can use to digest and help promote your own business. Shit, people are ripping me off anyway. Why not be you? Here is my email address, guys. Gary at hardmoneygary.com. It's usually at this point of the webinar that people have a few questions like, is this really for me, or how much money I can make? That was the goal. The entire presentation was to show you that, yes, it is for you, especially if you're in the real estate game already. There's no reason why you wouldn't be able to make money here. If you guys haven't already gotten in, there's the link to the school group. Could you go over the pricing of the boot camp and school group one more time? Yes. So this week it's 197 for you get the school group and the boot camp. School group for lifetime. Okay. Next week We'll have a $47 per month option, but only replays. It's very limited. You won't be able to join live, and some of the courses, and maybe a course will be locked. Or you get the 397 annual plan, which gets you a one-on-one call with me and the boot camp. I'm in. I might steer this more towards my girl. Can she been in the boot camp? Sure. If you guys want to do a 2-for-1, I can't stop you from logging in. I'd love for both of you guys to invest in yourselves individually, but that's how you got to make it happen, make it happen. What do you get with the 47? Really, you get the replays and and it's only the replays that get emailed to you uh after the day. We lock the mini course. So I wouldn't do it. Just joined. Nice, Roger. Good to see you. Michael Kiker is I have the funds. I have the funds, my situation a little different. Okay. Yes. With the 197, you get the replays and you get all of the previous replays inside the mini camp, the mini loan broker mini course. What if I can't make it on August 4th and 5th? Will those sessions be recorded? Yes, and they'll be uploaded into the loan broker mini course, and you'll be emailed them directly. Does the 397, 197, and 47 give you access to all the nationwide lenders? Here is access to the nationwide lenders, guys. You can go to your nearest biggest city and type in hard money loans, and a bunch of lenders are going to pop up. What you need access to are the ones that actually work with brokers and are competitively priced so that you have a wholesale channel where you can make money. Once you go through the boot camp, that is when you're registering with those lenders to get your broker account set up. And because my team is already familiar with those lenders' processes, that's how we're able to execute on your behalf. That's how we can get the deals closed. So if you've already gotten in, then go ahead and put I'm in the chat. I want to see who's actually working with us tonight. Roger Gully's in, Michael Kiker's in, Richard Feiss is in, Tara Hall's in, Cameron McGee's in, Winston Harper's in. Okay. Ben Thomas is in. Very good. Can I use DSCR loans to purchase turnkey real estate? And if so, what percentage down payment is required? Ike, so for turnkey properties, you would be able to use a DSCR loan. It is 20 to 25% down towards the purchase price, depending on the property and the cash flow. So if you're looking at a DSCR loan versus a conventional loan, it may be worth it to do the conventional loan because it's maybe a little bit lower down, lower interest rate. DSCR loans are best used at the end of the BRRRR process as the refinance. And I will say that straight up to a client. The best, highest use of the DSCR loan is as a refinance tool. For purchase, it's got to be a turnkey rent-ready property. Investors rarely can get those as at a discount. Luther Walls is in. Robert Adriano's getting his account set up. How many of you guys are all on the East Coast? PA, Maryland, Virginia, New Jersey, Connecticut, New York, Massachusetts, Rhode Island, South Carolina, North Carolina. I'm on the East Coast. Great. So on the East Coast, we have all types of markets. We have your expensive markets like in New York or Connecticut, Rhode Island, Massachusetts. We have our mid-tier fix and flipper markets like a Pennsylvania or a Southern Virginia, South Carolina, North Carolina. Where you choose to focus your marketing and your energy is directly proportional to how much you can get paid. If you're in those markets of like Massachusetts, Connecticut, Rhode Island, it's not unheard of. Diana Franco's in, it's not unheard of for people to be buying properties at $600,000, fixing them up, and then selling them for 1.2. We did that down in North Miami Shores, Miami earlier this year. My client bought the property for 750. They're going to put $200,000 into it. That's $1 million loan. Luther Walls is in. Our submissions to lenders online, everything that we do is virtual. Okay, so if you really want that work from home or remote work lifestyle, this is a business that you can go all in. You can go all in, like me. I work from home. I control my time. I'm able to spend it with my family. My wife's a teacher. We have very nice summers. That's how I'm able to get my pinkish hue, spending summers poolside. Now, here's the thing. We're not out here trying to make force our clients to go broke because of our service. We are looking to develop clients. Again, focus on developing 3 to 4 people that you can help them do 3 to 4 deals per year. Let's do that math again. Okay. So if we have 3 clients that are doing 3 deals per year and we get paid twice on each deal, that's 18 paydays. My minimum broker fee is $3,000. So what that means is that for 3 clients doing 3 deals a year, that's 54,000. Imagine what you could do with 6 clients. What could you do with 10? How hard is it to find 10 clients? Well, leads are easy. Leads are not going to be the hard part about this business. I got to be transparent with you. Finding people that need money is not hard. The hard part is qualification, making sure that they are the right fit for you and the products that you offer, and then being able to execute. I can control for you how to execute and the lenders that you can place them with. What you need to do is develop the relationship, convert your expertise into dollars, and deliver value. Some things that I've coached our clients on before on our one-on-one mentorship is creating your own meetup, being the facilitator, making people come together and have that energy where your expertise and their expertise are shared and you can be the facilitator for it. That's how you can get paid. That's number one. Number two, you go out to other real estate meetups and don't just do the coffee date. Well, let me take you out to lunch. Oh, can I pick your brain? No, 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 no. You need to be an asset. Hey, I'm working with a wholesaler. He's got some deals. Let me make a connection. A wholesaler sent me a deal. You're buying in this area. Here you go. Do you have a website or have online funnels to get biz nationwide? I mean, I have a link tree and things to come through social media like TikTok and Instagram. They come through there. But other funnels that I've set up, yes, we have processes for be able to intake and actually qualification and make and systemize the loan process. But as far as like marketing funnels, it's very simple. I want people to get to me as fast as possible. How much skin in the game is my BRRRR investor required to bring to the table to facilitate the deal? I like to see that the BRRRR investor has around 30% of the total project cost for purchase and rehab. That way I know that they can close on the property and start the rehab before draws. As a bonus for joining up in the school group tonight and getting the boot camp, I want to give you one-on-one consultation and advanced strategy session with me. Okay. The boot camp isn't for a couple of weeks yet. So there might be a situation where something comes up. I don't want that to be the case. I want you to take full advantage of your investment and seeing this opportunity for what it is. So when you get in with the school group and the boot camp tonight, you automatically qualify for an advanced strategy session with me. I do charge for those sessions $150. I'm giving it to you for free. I want results. I want you to get results. I want testimonials. This isn't some hocus pocus. Let me drag you on to the next thing, drag you on to no, we're here to get your results. When you're successful, I'm successful. How do we schedule that strategy call? When you're in the group, I'm going to shoot you a DM. I can't do everything right now, Rich. I want to. I can't do everything right now. I'm actually doing my shtick. But I'm going to get you a message. What's the lowest FICO score on DSCR loan, assuming 65 to 70% LTV? Mike Soto. We're going to go over all of that inside of the boot camp. Right now, lenders are getting a little bit tighter on their qualifications for max leverage. So work with a 680 credit score or higher. But lowest qualifications, I've seen it as low as 660 for DSCR loans. Sandra, Molieri, you're in here. Haven't said so much. What do you need to know to feel confident that this business is for you and how fast you can get paid? Sherry King, what about you? Otis? Otis Huff? What about Nathan Kern? We're going to run this webinar for another 5 minutes. If you guys have questions, go ahead and put them in the chat. If you want to come up and talk with me and get your questions answered that way, there's probably a lot of people sitting back thinking, I wish I could ask this question, but I don't know how to do it. If I buy and sell properties, can I get a loan for my business? Diana, you want business funding? That's a totally different than what we're talking about tonight. No, Roger, thank you. Nathan, you're here, but I want to know, are you getting in on the boot camp? Do you want to take this business seriously? Is this something that you could see yourself talking to other investors about, funding their deals, having those conversations, asking them 5 questions? Hey, tell me about your deal. How much money you're looking to make? Do you have cash to throw in on this? What's your credit look like? Can you ask those questions? Because if you can, then the next step is following the process. That process being pre-approval, that simple conversation, issuing a preliminary term sheet, sending over a pre-approval letter, ordering an appraisal, collecting the documents, quarterbacking the deal to close, making sure that title does what they need to do, insurance does what they need to do, get things over to the lender, getting that clear to close, and then getting paid. Can you follow that process? I saw a bunch of people that said they could follow the process. This right here is the launch pad to following that process. Here's the link again, guys. If you haven't bookmarked it, let's get you in. For a DSCR loan, minimum FICO is 660. Yes, we prefer a 680. 660 if you have experience and have done and own other rental properties. 680, the credit score influences the interest rate. The interest rate influences the leverage. The leverage is determined by the debt service coverage ratio, the DSCR, on what income is coming in from the property. That's the flow of how everything works. We got 2 minutes left here, guys. So let's put some more questions in the chat. David, I just got your email. Here's my email. Hard money gets a bad rap, but I like the integrity you have, which will go a long way with clients. Crust day. That's the answer. That's the answer to the question up above, where it was like, how do you make sure you're setting yourself different? It's the integrity. Why does hard money get a bad rap? Hard money gets a bad rap because there are fees, because it does carry a higher interest rate, but it's a tool nonetheless to execute for an outcome. The outcome meaning being getting most of the money that you need to fix up a property and get it sold. There are downsides. Of course, there's downsides. You don't want to be in this loan for 8, 9, 10, 12 months. That's when it gets expensive. But if you're working with folks and you're sharing that this is what's going to happen up front, then they can respect that. Shows you have integrity. We got about 30 seconds. Are we going to get the list of the hard money banks? Yes, when you join in the school group, it's one of the pin posts. If I get into this, would you recommend working with newbie BRRRR investors as opposed to veterans? I will tell you that the bulk of my business comes from people between deals 0 and 10. The life cycle of a real estate investor should be working with hard money and DSCR loans first, building up their repertoire so that they can take it to a private money lender, a private beneficiary, maybe somebody that lends to them on a relationship. Because who's going to lend to somebody if they've never seen a body of work? That is what a hard money lender is for. We work with newbies. We do. I've been able to get newbies approved time and time again for up to 90% of the purchase price, meaning they're only bringing 10% down. Okay, folks, that is a wrap for tonight. I put my email address in there. So if you have questions, contact me. The link for the boot camp and the school group is here. If you feel like you got some value out of tonight, you can find me at Hard Money Gary on all socials, TikTok, Instagram, and on Facebook. If you found value just out of this tonight, go to the page, leave a comment, say you rock. This was great. I learned a lot. Can't wait to see you at the boot camp. If you can do that, maybe there's another bonus for you. All right, folks, signing off. Have a great night. Thanks, Ike.